Hey guys, welcome back to the channel. We've been talking about different investment strategies and savings and some tips and tricks, but one of the things we talk about is one of the best things you can do is start a business. Well, when you go about doing that, you might look into partnerships or LLCs and stuff like that. And a lot of people don't even know what an LLC is. So I figured that's where we're going to start. We're going to start with an LLC and we're going to talk about different types of, you know, ways you can, do your business. So let's start with what is an LLC. Well, an LLC is a limited liability company, right? And it's a business structure in the U.S. that protects its owners from personal responsibility for its debts or liabilities. Limited liability companies, they're going to be a hybrid entity and they're going to combine the characteristics of a corporation with those of a partnership or sole proprietorship. Now, while the limited liability feature is similar to that of a corporation, the availability of flow through taxation to the members of an LLC is a feature of a partnership rather than an LLC. So, the limited liability companies, they're going to be permitted under state statutes, right? And the regulations governing them vary from state to state, right? LLC owners are generally called members. Many states don't restrict ownership, meaning anyone can be a member, including individuals, corporations, foreigners, foreign entities, and even other LLCs. Some entities, though, cannot form LLCs, including banks and insurance companies. An LLC is a formal partnership arrangement that requires articles of organization to be filed with the state. Now, an LLC is easier to set up than a corporation and it provides more flexibility and protection for its investors. LLCs may elect not to pay federal taxes directly. Instead, their profits and losses are reported on the personal tax returns of the owners. Now, the LLC may choose a different classification, such as a corporation. If fraud is detected or if any company fails to meet its legal and reporting requirements, creditors may be able to go after, the members, right, of the LLC. So let's talk about how do you form an LLC. Well, although the requirements for LLCs are going to be different, from state to state, there's generally, some things they all have in common. So the first big thing is owners or members must do is to choose a name. Now, articles of organization can then be documented and filed with the state. These articles establish the rights, powers, duties, liabilities, and all the other obligations of each member of the LLC. Other information included on the documents are going to include stuff like the names and addresses of the LLC members, the name of the LLC, registered agent, and the business statements of purpose, right? Now, the articles of organization are filed along with, whatever fee it is that's directly paid to the state. Now, paperwork and additional fees must also be submitted at the federal level to obtain your what's called an EIN, your employer identification number. So then, if we're going to form an LLC, what are the advantages and disadvantages, right? Well, the primary reason business owners opt to register their businesses as LLCs is to limit the personal liability of themselves and their partners or investors. Many view an LLC as like a blend of a partnership, right? Which is a straightforward business arrangement between two or more owners and, a corporation which has certain liability protections. Although LLCs have some attractive features, they also have several disadvantages, right? Especially depending on state law. An LLC may have to be dissolved upon the death or bankruptcy of a member. Now, a corporation can exist in perpetuity, right? Forever. An LLC may not be a suitable option if the founder's ultimate objective is to launch a publicly traded company. So we talked about, I mentioned partnerships earlier, right? So let's talk about an LLC versus a partnership. So the primary difference here between the partnership and an LLC is going to be that the LLC separates the business assets of the company from the personal assets of the owners, insulating the owners from the LLC's debts and liabilities. both LLCs and partnerships are going to be allowed to pass through, like their profits along with the responsibility for paying the taxes on them. And that goes to the owners. Their losses can be used to offset other income, but only up to the amount invested. If the LLC has organized as a partnership, it's got to file a Form 1065. If members have elected to be treated as a corporation, instead that's going to be a Form 1120. Now, in an LLC, a business continuation agreement can be used to ensure the smooth transfer of interest when one of the owners leaves or dies. Without such an arrangement in place, the remaining partners must dissolve the LLC and make a new one. Okay, well, why do you want one? What would you use an LLC for? Well, the two main advantages for this, right, is we talked about this a couple times already, right? It's going to prevent its owners from being held responsible, like personally responsible for the debts of the company, right? So if the company goes bankrupt, or if you're in real estate, you get this a lot. Like if someone gets hurt and they want to sue you, they can't. The personal assets of its owners, investors, they can't be pursued, right? And then it allows all profits to be passed directly to those owners to be taxed as personal income. That avoids double taxation of both the company and its individual owners. Okay, so you might think, oh, but there's probably no LLCs are for small companies, right? Well, let's talk about some examples. So LLCs are more common than you're gonna realize. I mean, Alphabet, the parent company of Google, that's an LLC. Pepsi, LLC. ExxonMobil, Johnson and Johnson, LLCs. Now there are many much smaller LLCs, and there are variations that include sole proprietorship LLCs, family LLCs, and member managed LLCs. Many physicians groups, they're going to be registered as LLCs. Now this again, it's going to help protect the individual doctors from personal liability for medical malpractice, that happens. So are limited liability companies taxed differently than corporations? Yeah. In the case of a corporation, profits are first taxed at the corporate level and then taxed the second time once those profits are distributed to the individual shareholders. This double taxation, a bunch of people are really upset about it, right? Especially by a lot of businesses and investors. Limited liability companies, on the other hand, they allow the profits to be passed directly to the investors so that they are taxed only once as part of the investor's personal income. So let's wrap all this up. What's the bottom line? What have we learned? What's the takeaway? Well, first, the limited liability company, it's a corporate structure that protects its owners from being personally pursued for repayment of the company's debts or liabilities. Regulation of LLCs vary from state to state. Any entity or individual can be a member of an LLC with the notable exception of banks and insurance companies. And then LLCs do not pay taxes on their profits directly. Their profits and losses are passed through to members who report them on their individual tax returns. So hopefully, you got at least enough information to decide whether this is something you want to look into or decide if this is something that's right for you. I didn't want to make it, just so much information that, it's just like, you drown it out. So hopefully it's, just enough information for you to go, okay, I need to look into this, or to go, okay, this isn't for me, right? But either way, I hope you liked the video, and if you did, hit that thumbs up button. If you're not subscribed to the channel, go ahead and subscribe to the channel. But until I see you guys in the next one, y'all be safe.